funds. Thank you for taking your time out. I hope you and your family are safe. And it's a different world that we are in right now. We are working from home. Even this video is being recorded from home. And the idea of this video is essentially to bring to you the new fund offer of ICICI Prudential Alpha Low Vol ETF. The NFO opens on 3rd of August and closes on 10th of August. And before I move on to the product itself, let me probably just highlight what's happening in the world around us in terms of equities, the liquidity, etc. And then I'll move on to the product quickly. So we are currently in an environment where there's a lot of uncertainty on account of the pandemic. And as we move along, because of the pandemic led stimulus of the economy, which almost all the central banks have given, there is a high likelihood of, at some point of time in the future, markets stabilizing. Now, the volatility is yours to stay for the next few quarters. But from an investor's perspective, what matters is asset allocation and what part of your asset allocation should go to equity and what part of your asset allocation should go to debt is something which you must figure out before you set out on your journey of investing. And now, once you've decided that, okay, X percentage should go into equities, there are various options which you have of investing, right, into equities. One of those options are ETFs. And within the ETF basket, it has always been our endeavor at ICICI Prudential Asset Management Company to provide with you various options within the ETF basket. So this is one more option within the smart beta strategy. It basically combines two smart beta factors, which I'll be speaking about in detail later. But the core of the ETF is, or what is an index fund is, that it is essentially something which a fund which replicates the index and it is listed on the exchanges. The advantage which you get, of course, is that they are traded real time on the exchanges and you can basically buy and sell on the exchanges on a real time basis. So it's a fund which is listed on the exchange and the fund is essentially mirroring an index. So the same applies to the ICICI Prudential Alpha Low 130 ETF as well. If you look at, for example, what are the benefits of ETFs, they are right in front of you on the screen. They trade at real time NAV. We try to, as an AMC, keep the spreads as limited as possible, and if it's possible, to provide as much liquidity as possible. And because it is based on index methodology, it is a transparent medium also of investments. Uh, if you look at, what is the growth in ETFs of India, if you look at the slide in front of you, uh, there are enough in the global world. There has been enough growth because of the movement of pension funds into ETFs, and I think that is also being replicated in India since 2015, wherein a lot of money. When I say a lot of money, essentially the PF trusts have invested a much larger amount of money than they were earlier investing into ETFs. And since 2015, the growth of ETF market has been good, mainly on account of the pension funds investing. So if you look at smart beta as a concept or investing as a concept, it may look very, very complicated, but it actually is not. What we essentially do is pick up various factors. You would have heard of value, growth, dividend yield, price to earnings, price to book, etc., quality. So if you combine one factor or multiple factors, and through the combination of these multiple factors, make an index, that essentially is a smart beta ETF and or a smart beta index. And an ETF which is based on a smart beta index is essentially what we are trying to bring forward in the ICICI Prudential Alpha Low Vol 30 ETF. If you see, what does this ETF bring into you? It is a multi-factor index strategy. It provides exposure to a combination of factors. And if you look at it, what are those two combinations? One is alpha and the other is low vol. And because you have two factors being combined, uh, they basically reduce two factors in combination helps to reduce the cyclicality of a single factor. So what is alpha essentially? If I have to explain, alpha is choosing those stocks which over the last 6 months or 1 year have done better than the benchmark index, right? And what is low vol is essentially those stocks which are stable, right? So alpha and volatility or low vol combined together is what this index is made up of. If you look at it in front of you, alpha plus low vol is essentially we are trying to aim for growth and stability. And if you look at how that is achieved, alpha is basically those stocks wherein the growth or returns are above uh, excess returns over normal returns. And if you look at low vol, it is essentially price fluctuation is less in those stocks. And the combination of these two is how we aim to achieve growth and stability in the portfolio. So, what is essentially the methodology of the Alpha Low Vol 30 ETF? If you look at it, the methodology of the Alpha Low Vol 30 ETF, it is very simple. Out of the Nifty 100, that is the top 100 names, and the next 50 names, if we combine, we get a universe of 150 stocks, out of which we choose 30 stocks. How are these 30 stocks chosen? 50% weight is going to alpha and 50% weight is given to low vol as factor scores. So a combination of these two is how you essentially get the index made. So not just the selection of the securities, but also the weightage of the securities is based on alpha and low vol. And that's what makes this product unique. And if you see the stock capping is essentially 5%. So also tried to reduce the risk of any individual stock being very high in the portfolio by capping the weight at the time of rebalances at 5%. Now, if you look at the portfolio constituents, there's diversified. You have consumer goods, pharma, IT, power, oil and gas, automobiles, and it's a diversified universe. And in some sense, it will try to catch a flavor of those sectors which have been doing well in the last 1 year or so. At the same time, those stocks which are basically been less volatile or has been stable. So it's a combination of these two factors. And if you see the representation of mid, small, or rather large cap and mid cap in this portfolio, you will find that across the 30 names, there is a good distribution of the large and mid names. So you find good proportion of large and mid in the overall portfolio. If I have to see, there is 49% in Nifty names in the portfolio as of June 30th, and another 43% in the Nifty Next 50, which is the 51st to 100th by market cap, and 8% is the mid cap exposure as of 30th of June. If you look at the calendar year returns, of course, it will showcase that till 2019 calendar year, 8 out of 10 times this portfolio has been able to outperform the benchmark indices as showcased in front of you, which is the Nifty 100, the BSE 500, and the Nifty 50. So 8 out of 10 times it has been able to beat the benchmark. And if you see what happens is when you are outperforming on a year-to-year basis, if you look at a longer term average, or if you look at the longer term between 2008 and now, there's a big gap in terms of the performance of this particular ETF versus, or this particular index, I should say, versus the rest of the market. So that is what basically essentially we felt that alpha and low vol as a factor, if we can bring it to the investors for the investors to invest, it will be a interesting opportunity for investors for the long run. So mind you, all these investments are meant to be for long term. Equity investments is not meant to be for the short term. And as a strategy, it is alpha plus low vol. In the long run, it should be able to give you alpha. In the shorter run, at times, there may be a possibility that cyclical factors and cyclical stocks do well. So there is a chance of an underperformance in the short term. But if you look at the longer term, as can be seen in front of you, it has been able to beat the broader indices. And the rolling returns, etc., are in front of you. If you look at the rolling returns on the slide, the average rolling return for this particular portfolio has been 18.8%. If we look at from 2005 to 2020 on a 5 year rolling return basis, and that is competitive versus the Nifty 100, Nifty 50, and BSE 500 ETFs indexes. So, friends, essentially what we tried to bring to the table was a portfolio which is differentiated, an ETF which is based on an index which we felt is differentiated. It is a combination of two factors, which is alpha and low vol. Alpha is essentially something which brings out, the performers or the excess, those stocks which have performed better than the market in general. And low vol is essentially those stocks which provide stability. So excess returns with stable portfolio as a combination in the long run is essentially what leads to growth with stability in the in this particular index, which is the Alpha Lowell 30 index. So the again, just to repeat, the NFO is open from 3rd August to 10th of August, and you can invest via various modes, which are online modes. And thank you for listening. Thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.